Let's take a look at the latest numbers from the Belgium capital markets. Over the course of the year, we see the total investment volume for 2019 come in at 4.8 billion euros. This is down 1% from 2018. This is widely above the 5-year average, but is down from the all-time high that we saw in 2018. If we take a look at the top 3 transactions for 2019, we can see that offices still dominate the market, but with alternatives accounting for the largest transaction of the year. If we look at the main volumes by asset class, offices are still on the rise, accounting for 54% of the market and increasing 20% year-on-year. Industrial is slightly down by 11%, as is retail by 63%, whereas hotels and alternatives have seen large increases. Looking at the 2019 investors' profile, we see a large increase of local investors. Belgian investors accounted for 51% of the transaction volume in 2019, which is an increase of 11.2% from 2018. Secondly, Asian and Italian investors accounted for 4% of investment respectively, with Germany at 18% and France contributing towards 11%. Finally, the US, UK and others accounted for 12% of the total investment. We see core transactions continue to dominate, with higher yielding core plus assets in high demand. There is also a rise in demand for value-added transactions coming from the developers. The office occupier market has seen a drastic change, with a decade-high take-up of 516,000 square meters, which is an increase of 43%. The average transaction size has nearly doubled in 1 year, as we see some mega deals taking place and towers coming back into fashion. The deals of the year show 70,000 square meters being taken by the Flemish community. In Brussels, we see the global vacancy rate fall by a further 0.7% from 2018, with rates inside the CBD falling to 2.8% from 3.6% in 2018. Following the all-time high of prime rents in Brussels from 2018, we see no change from 315 euros per square metre. The outlook for 2020, however, is for higher rents. Furthermore, prime office yields are at a new record low of 3.9%, which is 35 base points lower than 2018. The outlook for 2020 is that this will fall further. Finally, long-term lease remains dipped slightly to 3.5%, and we are predicting that this will fall further in 2020. Taking a look at prime office rents in other cities, we can see that Antwerp and Ghent have a 3.2% increase, with both Leuven and Liège remaining stable across the year. With an eye on retail, we see investors are cautious about retail assets, as the evolution of the occupier market makes the exit uncertain. As a result, prices are decreasing. The largest transaction for 2019 was Deca acquiring MIA 58 for 80 million euros. The fundamentals of the Belgian logistics market are pretty healthy. Portfolio transactions contribute to support investment activity and compensate the lack of new projects being for sale. There is an increased interest for residential assets by institutional investors. So far, opportunities are very scarce as the Belgian market is primarily driven by owner-occupier transactions, but demand for block sales is strong. So in summary, we see a zero interest rate environment is clearly in favour of property investments, with volume almost at 5 billion euros, but less than the all-time high of 2018. Prime office yields are compressing further, and the price of core office and logistics properties continue to rise. Investors are very cautious against retail assets as yields go up and prices go down. Thank you for your attention.